All right. Good morning, everybody. Hump day, middle of the week. We're halfway there. All right. As we do every morning, we want to start with the market watch, CPI, petroleum book, and that's it. So for the book, it's going to be in the later part of the day, right before the power hour, right before the bonds and the dollar closes. CPI is going to be right after the bonds open. The EPI may be a little bit impactful today. Could be. There's been a whole lot going on with, energy crisis around the world. So we definitely just want to be ready at 10:30 today. Normally energy makes up, a little impact in our marketplace. Just just because of the weight of the amount of energy companies that are in, like the S&P. When we were to quantify something and say, well, how much of the S&P is made up of energy companies, right? And then we can put a value on that, and we can say, 30 years ago, energy made up a very large part of the S&P. Nowadays, it does not. And so its impact had been kind of slighted in the last few years. I remember many times where I would hear someone say, energy just doesn't impact our market anymore. And maybe that's true most of the time, but as the last 9 months have shown us, energy is still a very large part of our marketplace, and it can affect our market. So let's just be prepared for that today, 10:30. The CPI numbers, this can radically change what the rest of the day is going to be today. Right now, we're on an inside day, which we're going to get to the charts in a moment. We're not expected to have a very large move in the market in either direction. But once these CPI numbers come out, that can significantly change. So be prepared for this. The numbers could be kind of gray area, a lot of ambiguity. The numbers could come out and everybody just kind of shrugs and says, I don't know, we're going to have to throw it to the nerds and let the nerds tell us what to do. Or they could be very extreme. If it's a CPI surprise, that could be an event that could rock our market. Or if it is very clear information with no shades of gray, no ambiguity, then these numbers can rock the market. So let's just be prepared for that. We're looking at 8:30 for this to kick off. And when that does, we'll rock it out. Right. So that deals with the economic news. Come into the charts. We're looking at the ES in a range bound market, as I'd already said. So we're sitting in Globex in the range, and we are sitting inside of yesterday's price action. Go ahead and turn that cloud off. We don't really need that. All right, so Globex low, Globex high. We are sitting in the middle of the range. That is our market for the day. If you were watching the tape yesterday, it was a sight to behold watching these guys defend this level. The amount of volume going through at this one particular level was phenomenal. Great learning experience if you're trading futures to have sat and watched the tape yesterday afternoon and watched them defend this level. It was an iceberg of proportions I'd never seen before, and it just kept going and going and going. Just really worth maybe turning on a volume profile and a time profile and going back and looking at the afternoon yesterday in the ES marketplace. For today, a move back up, we're going to have to get through the close of yesterday. Then we will deal with the Globex high. And to an upside move, we have the expected move top sitting at 29, and then a 0.5% move, a 1% move. Now remember, a good clean bullish day is a 1% move. If we happen to get a little bit more than that, we could be looking at 1.5. If we're going to make that kind of move, if it's going to be that kind of day, it's not going to sneak up on you. It's not going to be like, oh wow, shoot, look what we did. It will be extreme. It will be all engines firing. Tick, trend, AD, market breadth, all going to be ripping to the upside. You'll have, UVol, DVol, the sectors, everything. You'll have all of it. If it is very negative, it'll be the same thing. You'll have all of them, but they'll all be going to the downside, right? It won't be subtle, okay? That's what I really want to impress upon you. It's not going to be this slow, kind of creepy grind, unless it's just a grind to get back up into our own range. Say like yesterday was, when we opened it low and then we just kind of grind back up and we never really went anywhere. And then right in the afternoon, we fired off some tape and had that little move into the close, right? But for most of the day, even though this looked like it was doing something, it really didn't do anything more than get back into its own upper range, right? So from the low back up, yeah, you could see a little bit of a tape. But other than that, if you're looking for a 1%, a 1.5% move on the day, it's not going to be subtle. It's going to be in your face extreme. A move to the downside. We might as well cover that while I'm here before we go to the other direction. We're going to have to first get through Globex low. We'll deal with the floor pivot. 0.5% would put us near the pivot of yesterday intraday, and then the low of yesterday, and then the previous week's close, which is basically where we closed Friday. And then below that, we'll deal with the low of Monday, right? A 1.5% move to the downside. Now that may look extreme if you're new to trading, like, oh dang, going all the way back down to 44.44. But that's nothing, because for the week, a downside move could go all the way back down to 4,400 and it still would not be considered extreme, right? What would make it extreme is, one, if we made that entire move in a single day, or two, if we made that move in the morning, right? That fast. That kind of shakes people up. Or the NASDAQ, still inside the range. You can see that we're holding inside the Globex high, Globex low. We're sitting inside of that. We are sitting inside of yesterday's range. We have yesterday's high, and the floor pivot are kind of our guides at the moment for the lowest low and the highest high of the morning. That would be the range that I would draw. That'd be the box that I would define. I would expect that if we stay inside that range, it's going to be choppy, kind of disjointed, a lot of wicks. I wouldn't really be interested in participating in that kind of trading environment. I'd rather just sit out, wait for something good to come along. With the numbers that are going to come out, all of this could drastically change, and this sideways price action would be thrown out the window. Be prepared for that kind of event today. Asking the question, if these numbers don't please the market, right? Where are we headed? What is it going to look like on our way there? Dealing with the low of yesterday, and then a 1% and a 1.5% would get us very close to the previous week's close, where we closed on Friday. Right? That would be the target to the downside, dealing with a major pivot point right around 15300. It's the roundy. A move to the upside, if these numbers turn out to be positive and the market likes it, we would first deal with the previous high, which would be yesterday's high. Past that, 0.5%, 1%, and then a 1.5%. And again, that may feel like a very extreme move, like, wishful thinking. It's not that far away. We've seen the NASDAQ many times make a 1.5% move. And as you can see here in the upper left corner of my screen, the ADR, which I used a 21-day formula for this ADR, the average daily range in the NASDAQ is 1.6%. So 15631, the number showing for a 1.5% move on the day. Well, that's the average. That's the norm. That's not even standing out outside, right? That's just common everyday moves. So the NASDAQ could easily make a move to 1.5% in a day. Typically, we would already have made a large part of that move before we come into the open. If we were to go from where we are right now, which is flat on the day, to a 1.5% move, that would be pretty extreme. It would be more likely that we make a 1% move at this point, since we've already given away, 12 hours of trading from 6 last night until, well, basically 8 o'clock this morning, right? So we've missed out on a lot of opportunity to have already made this move. But 1% on the day is still a doable thing. Only if the numbers are good or the numbers are bad do I expect to make those kind of extreme moves. If it's gray area, if it's a lot of ambiguity, I really don't think we're going to come out of this range other than to maybe wick down and come right back inside the range, or wick up and come back inside the range. Really expecting a range day. And why not, right? Look at the kind of move that we've had in the last week. There's last Wednesday. There's this Wednesday. Come on, man. We made a heck of a move. Yeah? Okay. 14,500 to 15,500. Oh, yeah. Right? And then people wonder why I swing trade. Really? Looking at the sectors this morning, we can see that finance is basically flat. Metals are basically flat. Cloud computing is down more than 1/4%. Energy is down 0.5%. And that new Bitcoin ETF is down near 0.75%. On the positive side, however, jets are up more than 1/4. And then healthcare, which glad to see this is turning back around. Healthcare is up, more than 1/10. And communications are up more than 1/10. We got to let the rest kind of shake out. When they're less than 10, or around 10% on either side, I don't really get into that too much. Don't care. It needs to give me more than that. All right. So as usual, let's just go ahead and look at the grid. You can see we had a contract change in the VIX. The dollar is still range bound within that Globex range. We're above yesterday's intraday, but we are still inside yesterday's price action if we count from Globex to close. So right now the dollar is inside day and the bonds are inside day. Close. Now that I say that, maybe not. The bonds are actually out of the range. They have an inside day breakout. They're below yesterday's range. Keep your eye on these two markets, especially when that CPI data comes out, right? We really want to get an understanding of how that's going to affect our market. And it is going to significantly hit the bonds and the stocks, right? If it's going to be that kind of information, if the market likes it or doesn't like it to an extreme of one side or the other, you will see the bonds and stock making moves. And very likely, it won't be in the same direction. As I've said before, when you're trying to identify which one is our helper today or which one is going countervalence today, if you see the bonds pressing up against a resistance level, look at the S&P, look at the NASDAQ. Are they also pressing up against a resistance level, or are they pressing down against a support level? If the bonds are at support, is the ES at support or resistance? Now, typically we would say, well, if the bonds are at support, the ES will be at resistance. But we know in the last month, multiple times, this hasn't been true. And Tasty Trades did a huge research project that proved stocks and bonds correlate for years at a time. And then they go divergent for years at a time, right? So it's not a fixed feature where bonds and stock are always moving in the opposite directions. Bring up Trading View, set it to the S&P 500. We want to leave the market cap alone but we do want to adjust the filter because we just want 100 names. It's always a little tricky to get 100 names. There we go. Notice the range bound market. That's why I titled this range bound. Yeah, we have a couple names that are up a little bit and some green. I mean, you got to like the green, but we got nothing, right? We got a whole lot of nothing. Not even 10 names are up more than 0.5%. We don't need a filter. We swap this to the NASDAQ 100, leave it on market cap, put it on pre-market change percent. Now we've got a little bit more color. The NASDAQ's getting a little more love than the ES this morning, or the S&P. But asking the same question, how many names are up in the NASDAQ? At least 0.25%. Less than 10. How many names are down in the NASDAQ? At least 0.25%. 10. Just a very sideways morning. Now, when you're looking at these names, recognize peer groups. Chip name, right? Follow them down the rabbit hole. Look for your trade opportunities. Go out to their daily chart and look for, an R2G setup or a failed flag, trendline breakover, inside day breakout. Look for one of those to follow through to give you a setup opportunity. Otherwise, your watch list for the pre-market will just get too long. Just too many names in there. So as I talked about while we were looking at Thinkorswim, not a whole lot going on in the sectors yet. We're not going to be able to lean on those sectors unless the data today really kicks our market into gear. We will have to rely on our scanners and actually go in and be stock pickers today, right? Normally we would just backtrack through the sectors into the subsectors, industry, sub-industry to find our trades. We're really not going to be able to do that today if the CPI numbers don't give us something worth using, right? We're going to actually go in, run our scanners, and be stock pickers today. Nothing really standing out in here. It's always good to just, kind of take a peek. This obviously is not, breaking news kind of stuff. It's more of a broad outline. Those clickbait headlines aren't, the solution to like deeper understanding. So being able to go in and actually read a well-written article about something, right? Like NIO doubling its capacity. Where, how much, going in and actually being able to read that and then following it down. If you were trading EV markets yesterday, for an example, Li Auto, XPEV, NIO, even Ford and GM fit into the EV category now. I was trading them yesterday. Knowing what's going on, over there with NIO and what's going on kind of breeds a better understanding of the market that we're trading. Right? Always backtrack a little bit. Just step back, kind of ask, what's moving markets? Now, for a long time at the Bullish Bears, we were doing watch lists in the evenings, and those watch lists would be for like tomorrow's trading. We don't do it as much now as we used to, but one thing to keep in mind is if you're trying to learn how to build a watch list, watching those old videos are immensely valuable, right? And you can go in and you can find those watch lists. One, you can go to the YouTube and just search bullish bears and go through the YouTube list. There are years where we've spent building nightly watch lists for swing trades, for day trades. They were done live, so there was like a give and take in the community. There was people asking questions and questions getting answered. Backtrack into that and look at that. Then there's also, kind of getting the process of how to do a morning routine, how to build your own morning routine so that it fits your account size. It fits the things that you want to trade, right? Learning how to do that. If you go to the Next Level library, there's the entire like day trading process, the steps we would take to prepare for a trading day as day traders, and entire strategies that are developed, right? And then of course, getting into scanning. Work your way through the courses. If you've already traded for the day and your day done, come over and just, start working through the material. I've had people tell me, oh, well, I'm already a trader, I don't need the beginner stuff. And then I'll ask them, a very simple question. They'll say, oh, I don't know. I don't know what that is. And that's because nobody made us prove that we knew enough to trade, right? They just said, here, open an account, put money in it, voila, go trade. And without ever really digging down and understanding the basics, we went right in and started trading. And yet, how many of you are buying options, hitting market order, not haggling for a fair price, right? Not negotiating with limit orders, just using a market order and handicapping your position from the very beginning? How many of you are trading options and don't understand why price is going up and your call is still losing money, right? Or how to pick an out of the money strike that would be way more beneficial and offer you way more reward for much less risk. There's so many basic things that are the foundation of trading. Come over and check out the courses. It's full of that information. Come in and ask us questions at the Discord while we're streaming live or even afterwards. Come into the audio and hang out. That's what I got, guys. Have a good morning. I will be streaming today through the morning. I think we're going to focus on a couple of acceleration band breakouts off the weekly time frame. And we're going to talk a little bit about maybe a 10% correction in the market and how you can always be prepared for a 10% correction really cheap. Just using a cheap little hedge, and then paying for the hedge too, so that you're not even going to risk that money. We'll get into all of that and more at 9 o'clock. See y'all there.